Secretary Yellen, you are now recognized for 5 minutes to present your oral testimony.
Here it comes. Let's see if she says bye, AMC.
We're meeting at a hopeful moment for the economy, but still a daunting one. While we're seeing signs of recovery, we should be clear-eyed about the hole we're digging out of. The country is still down nearly 10 million jobs from its pre-pandemic peak. When Congress passed the CARES and Consolidated Appropriations Acts last year, it gave the government some powerful tools to address the crisis. But upon taking office, I worried they weren't powerful enough. After all, there were and still are some very deep pockets of pain in the data. 1 in 10 homeowners with a mortgage are behind on their payments, and almost 1 in 5 renters are behind on their rent. There are 22 million people who say they don't have enough food to eat. 1 in 10 adults are hungry in America. I looked at data like these and I worried that the COVID economy was going to keep hurting millions of people now and haunt them long after the health emergency was over. We know that when the foundations of someone's life fall apart, when they lose the roof over their head, or the ability to eat dinner every night, the pain can weigh on them for years. Their earnings potential is permanently lowered, and I worried about this happening on a mass scale. That's why I advocated very hard for the American Rescue Plan, and why it's my first and my most enthusiastic message today. Thank you. With the passage of the rescue plan, I'm confident that people will reach the other side of this pandemic with the foundations of their lives intact. And I believe they'll be met there by a growing economy. In fact, I think we may see a return to full employment next year. Of course, the speed and strength of our recovery depends in part on how we implement the legislation. Treasury is tasked with much of that work, and there's nothing that I or my team take more seriously. We appreciate your oversight on this matter, and I want to briefly tell you about how we've been working. Since taking office 2 months ago, we've been expediting relief to the areas of greatest need. For example, small businesses, and especially the smallest small businesses, which are disproportionately owned by women and people of color. The pandemic has hit these businesses hard. The Paycheck Protection Program was an early lifeline, but because of issues with the program's design, the first rounds often didn't reach the smallest sole proprietorships. We're addressing that now. We worked with SBA to tweak how the program was implemented. It's allowing the PPP to reach millions more micro businesses and entrepreneurs, especially in rural and low-income areas. We're also building capacity to support these communities over the longer term. Because of the December legislation, Treasury now has $12 billion to inject into community development financial institutions and minority depository institutions. In turn, these CDFIs and MDIs can lend that capital out, helping people buy homes and start businesses in places that the financial services sector traditionally hasn't served well. Then there are the families I spoke about, the ones struggling to keep a roof over their head and food on the table. The American Rescue Plan provides more than $30 billion to help renters and homeowners at risk of losing their homes. And we're making sure that assistance flows as efficiently as possible. For instance, the previous administration put in place rules that required tenants and landlords to provide quite a bit of documentation to get rental assistance, including detailed statements about their income. But some people don't have access to those documents. We're cutting through the red tape for them while still taking responsible steps to prevent fraud and abuse. And of course, we've been sending direct payments to Americans, a lot of Americans, As of last week, we had issued over 90 million payments. And all this is just a fraction of Treasury's work. There are so many more relief programs, including one that will provide $350 billion in aid to state and local governments. Implementing all of it is more complicated than it sounds, and we're working closely with stakeholders to make sure these programs are both efficient and effective. Behind these many relief programs, these millions of transactions, are a staff of very dedicated and very tired Treasury and IRS employees. My final word is to them. Thank you. You're putting on a master class in how government should work in the furnace of a crisis, and I'm grateful to be your colleague. With that, I'm happy to answer any questions you have.
Okay.
Thank you very much, Secretary Yellen. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the committee, thank you for the opportunity to discuss the measures that we've taken to address the hardship wrought by the pandemic. I'd like to start by noting the upcoming one-year anniversary of the CARES Act. With unanimous approval, Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. This historically important legislation provided critical support in our nation's hour of need. As the virus arrived in force, our immediate challenge was to limit the severity and duration of the fallout to avoid longer run damage. At the Fed, we also acted with unprecedented speed and force, using the full range of policy tools at our disposal. Today, the situation is much improved. While the economic fallout has been real and widespread, the worst was avoided by swift and vigorous action from Congress and the Federal Reserve, from across government and cities and towns, and from individual communities in the private sector. More people held onto their jobs, more businesses kept their doors open, and more incomes were saved. But the recovery is far from complete. So at the Fed, we will continue to provide the economy the support that it needs for as long as it takes. As we have emphasized throughout the pandemic, the path of the economy continues to depend on the course of the virus. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued social distancing and mask wearing will help us reach that goal as soon as possible. Indicators of economic activity and employment have turned up recently. Household spending on goods has risen notably so far this year, although spending on services remains low, especially in sectors that typically require in-person gatherings. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. As with overall economic activity, conditions in the labor market have recently improved. Employment rose by 379,000 in February as the leisure and hospitality sector recouped about 2/3 of the jobs it lost in December and January. The recovery has progressed more quickly than generally expected and looks to be strengthening. This is due in significant part to the unprecedented fiscal and monetary policy actions I mentioned, which provided essential support to households, businesses, and communities. However, the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak, and the unemployment rate, still elevated at 6.2%, underestimates the shortfall, particularly as labor market participation remains notably below pre-pandemic levels. We welcome this progress, but will not lose sight of the millions of Americans who are still hurting, including lower wage workers in the services sector, African Americans, Hispanics, and other minority groups that have been especially hard hit. The Fed's response has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. When financial markets came under intense pressure last year, we took broad and forceful actions, deploying both our conventional and emergency lending tools to more directly support the flow of credit. Our actions, taken together, helped unlock more than $2 trillion in funding to support businesses large and small, nonprofits, and state and local governments between April and December. This support, in turn, has helped organizations not shutter their businesses and put employers in both a better position to keep workers on and to hire them back as the recovery continues. Our programs served as a backstop to key credit markets and helped restore the flow of credit from private lenders through normal channels. We deployed these lending powers to an unprecedented extent last year. Our emergency lending powers require the approval of the Treasury and are available only in very unusual circumstances. Many of these programs were supported by funding from the CARES Act. Those facilities provided essential support through a very difficult year. They are now closed, and the Federal Reserve has returned the large majority of the Treasury's CARES Act equity as required by law. Our other emergency lending facilities are following suit imminently, although we recently extended the PPPLF for another quarter to continue to support the PPP. Everything the Fed does is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible on behalf of communities, families, and businesses across the country. Thank you. I look forward to your questions.
Thank you very, very much, Chairman Powell.